Yeah, good morning, everyone. So yesterday we saw US market coming off, and also Asian markets are indicating lower trend. This is followed by some data from the US, wherein in the big book, which has been released by the Fed yesterday, indicated that post-April there are some slowdowns in the economic growth, and that has taken the market down. Also, we saw increase in the dollar index, which has moved up by almost around 50 basis points yesterday. And also, the bond yield has moved up to 4.67. Yesterday, it moved up by around 7 basis points. So all these together has resulted into softer market in the international. US also saw some of the company reporting poor number, where in that IT company, uh, because of the numbers, the stock was also down. So all these together has resulted into US market correcting, and that has been followed by the Asian market as well. Uh, Yesterday, there was some news of S&P 500 upgrading uh, upgrading the outlook on rating from stable to positive. India has a rating of triple B minus. Uh, they had indicated that the outlook is now positive and can see stable growth in next 2 to 3 years. So this has uh, created a slit wherein the rating can be upgraded in the coming periods. So that has acted bit positive yesterday. So apart from that, what we were seeing yesterday that we saw index level decline, but mid cap and small cap yesterday holding up. But what we see that pre-elections there will be some profit booking, and that will continue in next 1 or 2 days. Uh, Now I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, last 2 to 3 trading session, we saw that some pressure and some profit booking and higher end because Nifty already trading in resistance zone in upper side, and momentum indicator also in overbought zone, showing the some profit booking downward cutting. To expect this momentum to be continued to today, we expect gap down open and witness to selling during the trading session. If Nifty break 22,600 in first half an hour and first 1 hour, then we expect this pressure to be continued towards 22,540 and 22,470 at downside. Flip side, upside 22 to 22,007 70 is the first immediate resistance for index, and then 22,840 next coming regular resistance for this expiry. So right now Nifty trading range is 22,600 is support side and 22,840 in resistance side. If Nifty break these two side either, then the trend will be just shifted in that side. If 22,600 below, then it will the separation to be increased towards 22,470. Bank Nifty also showing us some profit booking in upper range. First immediate support place around 48 to 70, and below that 48,000 and 47,800 next immediate support for Bank Nifty. Upside 14 8 900 and 49 300 and major resistance for Bank Nifty. The both index open on negative side, and first half an hour is sustained below the important level. Then we expect some pressure during the day. Fin Nifty also showing us some negative side. 21 720 is the first immediate support for Fin Nifty, and below that 26,600. Upside 21,930 is a major resistance for Fin Nifty. So all three index, we see some pressure in today's session, maybe towards expiry Nifty. Nifty settle below the 22,600 and maybe 500 between. Stock specific, Aditya Birla looks positive. Yesterday we saw some positive momentum. Cummins India also looks positive in the last three trading session. Upside again, 4,000 target we can expect, and major support place around downside 37.90. Negative side, Axis Bank looks weak. Yesterday we saw some pressure, and this pressure to be continued today's session also. So Axis Bank looks weak, and downside first support place around 1120 and 1100 in Axis Bank. BPCI also looks weak current level, and Indian Hotels also looks for a negative side. So that's it for technical derivative I can get.
Yeah, thank you. Good morning, everyone. On the derivatives front, there is not much of a change from the data perspective. As I said yesterday, also that the Nifty is likely to open on the lower end of below the breakdown level, which was at 20,800 mark, where we have seen that the call at the positions have added on completely from last 3 days of trading session. This was the first. This was the first data point where we are seeing that the Nifty is already triggered for the lower end and shifting downside towards the 22,500 to 400 level. Now, as for yesterday's scenario, we are seeing again that the call data position have got added up heavily from 22,700 to 23,000 mark. Against that, we are seeing that at 22,900 and 23,000 mark, put at positions are started to getting liquidated and is getting shifted on the downside toward 22,500 and 300 strike. So, in today's session, also we might expect the selling pressure to be witnessed, and once if Nifty goes below 22,500 level, then we might see selling not only from the index specific front but from the stock specific front also. Selling pressure will rise if Nifty goes below 22,500 level. As per current scenario, as per the OI position, the range which has been created right now is from 22,300 to 22,800 mark. This is the 800-point range. Now we will see in the Nifty for coming days of trading session. Till the time this range is not getting broken out, till that point of time, we might witness some sell-off pressure from the upper end level. While India Week yesterday closed at 24.18 level, India Week was a flattish in yesterday trade of trading session. In next 1 to 2 days of trading session, we might expect a sudden move of India VIX from 10 to 15%, due to which the volatility will get healthier, and we will see wild moves in the market in next 1 to 2 days of a trading session. While PCR yesterday closed at 0.79 level, still there is a lot of space for the PCR to go on the downside towards 0.72 to 0.66 level. The support for the PCR on the downside lies at 0.65 to 0.64 level. Till that level, we might witness some sell-off from the Nifty front, due to which once if PCR comes in 0.66 to 0.68 level, at that point of time we might witness some reversal again in the market. But in the first half of trading session, we will expect some sell-off momentum in the market. While on the stock specific front, a counter that looks positive for today's session will be Gujarat Gas, Cummins India. AU Bank looks positive. Cummins India, we are seeing that a fresh long position has been created. If the positive momentum gets continued for first 1 hour to 2 hour of trading session, then we will see some buying momentum will be witnessed in the second half. While on the negative front, a counter that seems to be on the selling pressure in today's session will be GNFC, M&M Finance, and Muthoot Finance. These three counter looks negative in today's week of trading session. So that's it from Derivative Front. Thank you.
Good morning. There is news on Edelweiss that RBI has imposed business restrictions on two Edelweiss Group companies, Edelweiss ARC and its NBFC company, ECL Finance. RBI has asked ECL Finance to stop undertaking any structured transactions in respect of its wholesale loans, other than repayment or closure of accounts in the normal course of business. And RBI has also instructed the ARC company to cease and desist from acquisition of any financial assets, including security receipts, and reorganizing the existing security receipts into subordinate tranches. So both these businesses are a significant part of Edelweiss Group's overall business. So this should be seen as negative for Edelweiss. Aventel Limited has received an order worth 110 crores from Ministry of Defense for supply of SATCOM equipment. This order has to be delivered within 12 months. So positive for Aventel. On the result side, Cummins India result is ahead of expectation. Revenue grew by 20% year on year and was 7% above estimates. Domestic sales grew 38% year on year, while export sales were down 30%, impacted by geopolitical instability. EBITDA margin was the main surprise, which came at 23% versus expectation of 18%. And December quarter, it was 21%. Growth in EBITDA margin could be attributed to higher growth in higher horsepower segments. Profit also grew 75% year on year and came at 561 crore versus expectation of 355 crore. So substantial beat on profits as well. So even in quarter three, if you recall, Cummins result had been way above expectation. So similar trend could be possible going ahead as well in Cummins. Aadhar Housing Finance result is okay, although it's a newly listed IPO into housing finance. The AUM growth was 6% sequentially, 23% year on year. Net NPA also declined from 1% to 65 basis points. However, profit before provisioning declined by 10% sequentially due to flattish NII growth and elevated OPEX, resulted in which also resulted in flattish profits on sequential basis. So near-term stock can remain sideways, but from long-term point of view, treated like a 18-20% kind of compounding stock. Thank you.
Good morning. Nosir has posted the results, and results were below expectations. Revenue degrew by 9.2% on a YY basis. In terms of volume growth, quarter four volume grew by 12% on a sequential basis, while there was a marginal improvement on a YY basis. During the quarter, exports volumes has seen growth trajectory. EBITDA margin reported at 12.5% versus expectation of 14.1%. This was largely due to as the selling prices remained subdued, and the profit reported at rupees 41.5 crore versus expectation of 30 crore. And also, if we compared with the last year same quarter, it was 28.3 crore. So this was on account of the exceptional profit of on sale of fixed assets worth rupees 18 crore. The stock is trading at a PE of 26 times to FY25 EPS. Heritage Foods Limited posted the results above expectations. Revenue grew by 16.3% on a YY basis, and the EBITDA margin reported at 7.4% versus expectation of 6.1%. The stock is trading at a PE of 23.5 times to FY25 EPS, and we will provide the outlook post the con call. Emami Limited posted the results in line with expectations. Revenue grew by 6.6% on a YY basis. In terms of volume growth, domestic business registered 6% volume growth, and international business has grown by 8%, where it has seen 9% growth in CC terms. EBITDA margin reported at 23.7% versus expectation of 24.5%. During the quarter, it has seen the advertisement expenses has rose by 470 basis points on a YY basis. The management has experienced signs of recovery and gradual demand growth in rural, where the company has added 75,000 outlets in FY24 in rural. Overall, it has achieved direct reach of 1 million outlets across urban and rural. The management expects revenue growth at double digit on its FY24 low base, with some rise in pricing given the favorable RM costs, and EBITDA margins are also expected to grow during the year despite higher ad spends. During the quarter, it has seen that Kesh King and male grooming range has declined. The stock is trading at a PE of 26.8 times to FY25 EPS, and we are neutral on the stock as we don't see any significant growth beyond FY25. Thank you.
Yeah, Tata Steel came up with the numbers, and results were ahead of expectation, mainly driven by standalone volumes. So the volume came in at 5.4 million ton in standalone India operations, whereas expectation of 5.2, and last quarter 4.88 million ton. EBITDA per ton for the standalone operations were more of a on expected line and declined by almost around 2,000 rupees on quarter-on-quarter basis. EBITDA per ton came in at 14,850 rupees. Whereas European operation continue to incur losses, both Netherlands and UK, both the operations are incurring losses, and volumes were bit higher. That may be because of higher cost of coking coal in the last quarter, and which has come down in the current quarter. So there is a possibility that UK operations see revival. So overall, at consolidate level, company has reported volume of around 8 million ton versus the expectation of 7.9, and last quarter 7.15 million ton, and last year 7.78 million ton. And EBITDA per ton at consolidate level came bit higher at 8,270 versus expectation of 7,600 crores, and last quarter 8,760 crores. So there is some improvement from the expectations, mainly because of the international a bit higher, lower loss as compared to expectations. So overall, share is trading at somewhere at around 6.5 times FY26 earning. Company has given roadmap for doubling the capacity over a period of next 4 to 5 years. Apart from that, Tata Steel has also said that they will be infusing around $2.11 billion or 17,500 crore rupees in their subsidiary, international subsidiary, to repay the debt and also to support the Tata UK operations. So the bifurcation between these two is not given, but if the amount allocated to Tata Steel UK is larger, then it can act a bit negative for Tata Steel. Then apart from that, the other result which came up yesterday are Shami Hotel that has reported results a bit lower than expectations, though company has reported profit in this quarter after a long time. That is because of a reduction in the interest cost because of repayment of debt from the IPO proceeds, and also the EBITDA margin has also seen some improvement. Sales came bit lower than expectation, mainly because of one of their hotel they send it to renovation, though the contribution in the profitability was lower from that particular hotel, but the revenue declined, and EBITDA has come at around 97 crore versus expectation of 96 crores. So we were expecting bit higher than that because Q4 is generally very strong quarter for business hotels, and they get full 91 days of operations, and which was not the case in the result. So what we expect, though the result were in line with market expectations, but we expect against our expectation, it was a bit lower than that. Anyhow, apart from this, the growth plan for the coming period is comparatively better, considering that now the debt level are manageable and also the interest cost is coming down. Apart from that, almost around 500 to 600 rooms will get added in September from renovations and some additions. So second half of the current year will be comparatively better, considering that the momentum of the rate increase of around 7-8% in the hotels continue. If that continue, then second half will be comparatively much better for Shami Hotel. And looking at the valuations, it looks very attractive at 12 times EV by EBITDA FY26 as compared to most of the hotels are running at around 20 times plus EV by EBITDA. So that give comfort on the lower side also, as the valuations are attractive. So outlook is positive from a long-term perspective. H1 is generally a softer period, so may remain sideways in that period. Then Liberty Shoes, a smaller company, has reported turnaround in this quarter and reported EBITDA of around 25 crores against last quarter 10 crore and last year 14 crore. So that stock can see some momentum in the today's trade. One of the companies getting listed is the Wi-Fi space, which is a work sharing space company. So issue got substantial response from the market. The company was reporting consistently losses, and as such, we had a neutral view on the company, but the response was good and quite possible because of that we may see comparatively better listing on the stock exchange. So now request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So today's session, prices are expected to cool off. Already prices have opened a gap down. So on pullback, one should sell. Gold, one can initiate a sell around the August contract around 70 to 200, 250 and maintain a stop loss of 70 to 450. On downside again, it can test 71, 900 to 700 on downside. Silver expected to sell around 95, 300 to 95, 500 zone. And one can expect prices to test 94,000 to 93, 500 on downside. In metals also, copper is expected to test um, 890, 888 levels on downside. There could be some pullback till 898, 900 levels, whereby selling should be initiated with a stop loss of 905 levels. And on downside, if 888 is breached, then we might see 880 downside. Zinc also we are expecting 272, 270 on downside. So selling around 275 is recommended with the stop loss of 277. And crude oil, there is a range bound movement from 9500 to 9700. Though one can trade within this range. So for trading purpose, one can buy around 6550 and maintain a stop loss of 6470. Whereas on upside, if prices test 6680, 6700, then selling pressure is being witnessed. So one can maintain a small stop loss of 6730 and sell. And in natural gas, prices are expected to test 215 on downside. So selling around 227 to 20 is recommended with a stop loss of 235. So that's it from us. Thank you very much.